What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 13th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we've got a wide range of topics to discuss. We're going to start off first by talking about a relatively exciting topic that's going to be coming up here in the next coming months, and that is ETH 2.0, the major upgrade that's coming to the Ethereum network. It's going to integrate a variety of changes, predominantly going from proof of work to proof of stake. So I'm going to be diving a little bit into this as we go throughout the video, and then we'll also be spending some time to review Bitcoin post-halving event. After a few days from the halving event, we see Bitcoin's holding up quite nicely. In fact, prices are tethering back upwards towards $9,000. Could we be expecting that this is going to go higher, possibly break the point of resistance that we've been up against, or are we going to go down to around $7,000 to $8,000? I want to talk about this as we go throughout the video, right after our quick sponsor. Our sponsor for today's episode is Bitpanda Pro. If you're on the hunt for a proven, trustworthy exchange in Europe to trade your crypto, then I recommend taking a look at Bitpanda. If you're just getting started, many people refer to Bitpanda as the European Coinbase, so it can be a great place to start in getting your first crypto positions. With over 5 years of experience serving the industry by offering easy and secure access to digital currencies, Bitpanda has really earned its reputation. Check out the link down below in the description for more information. Alrighty, everyone, so let's go ahead and spend some time to take a look across the board of the market real quick, and then we'll dive straight into the ETH news. I want to share with you all real quick that the vast majority of cryptocurrencies right now are generally in a no-trend scenario between 1% to 2% to the upside or downside. However, we do have a good amount of plays here starting to enter into some pretty well-performing territory. Some cryptocurrencies doing double-digit performance as well. But for our plays, really Kyber Network, I think, is leading the way, as well as Energy up here around 5%. So we've got a few good plays doing well today, nothing too crazy. And I do want to share with you all real quick that I actually was very fortunate enough to speak at CoinDesk's Consensus Distributed. So this is the online version of Consensus, because I was originally planning to speak at Consensus this year alongside, I think, dozens or hundreds of other speakers, and they sadly had to cancel the conference due to all that's going on. So if you guys want to watch this, you can look up First Mover with Matthew Graham and Nick Merton, or you can check out the link I'll put below in the description. It's a very interesting conversation with Brad, with Cami, as well as Matthew, who runs a fund himself. So I highly recommend you guys check that out. But anyways, back to the actual topic here. So there was an article that came out as Vitalik Buterin, who's the founder of Ethereum. As many of you might know, he also spoke at the Consensus Distributed conference that I spoke at as well. And Vitalik speaking there, of course, is a very big deal. People want to hear about the developments with Ethereum. And, you know, whether it was a misspeak or not, there's been some controversy about a supposed either leak or confirmation in this case that Ethereum would be launching ETH 2.0 this July. And many people were, asking, is this too early and stuff? And then Vitalik came back and confirmed that, they're basically not confirming this for July by any means. And all in all, guys, I think this is a bit of drama and just misunderstanding. I don't know, maybe if Vitalik really said it. I haven't even really listened to the audio clip. I don't really care too much. I'm going to go back and probably listen to it sometime soon. But the major thing I really care about here is starting to intro the conversation of ETH 2.0, because it is generally inevitable. It's going to come sometime, hopefully this summer, but really more than anything, it's going to come when it's ready. And this is going to be a very big catalyst for the cryptocurrency space, especially for the Ethereum network. Now, you all know I've had a big shift, especially for those of you who have been fans of the channel for a long time. I've had a very big shift in my philosophy and my opinion of Ethereum. I've been a very big supporter of it over the last year. And really over the last few years in the sense of its actual fundamentals, because I've always loved the vision of Ethereum with the use case of developing really interesting smart contract applications, decentralized applications, predominantly in the space of finance. And that's why I've been a big supporter of projects like Kyber Network, which have been working on decentralized exchanges. I've been a big supporter of projects like Oracle, projects like Chainlink, for example, that have actually helped to bridge some of the gaps where Ethereum needs to connect to outside sources in order to build valuable applications. There's all kinds of different projects that I've been a big supporter of. However, the problem with Ethereum is, that originally we were just clustered with ICOs and massive speculation, where ETH was basically just a tool or a conduit to basically fund very speculative projects that inevitably in many cases didn't deliver outside of a few of the key projects that are still remaining today. So that was my problem with Ethereum. But now we've got DeFi, decentralized finance, which again, we're going to continue to talk a little bit about more. But I think talking about some of the baseline components of Ethereum is a little more important for us to discuss. So what is ETH 2.0, right? If this is going to be the topic for today, let's just kind of cut to the chase. What is ETH 2.0 at the end of the day? Well, to put it simple, it's the next major upgrade that Ethereum is going to be going through. Ethereum has gone through a variety of different, like, kind of smaller tier updates over the last couple of years. Since back in 2017, there's really been some big ones that have gone through and make small minor changes to how, for example, contracts are written on the Ethereum blockchain, basically the language underlying and Solidity. So yeah, you have to constantly kind of make these adjustments over time as a developer to your dApps, your smart contracts. But along with that, ETH 2.0 in this case is going to be offering a major change. And that is going to be going from a consensus mechanism of proof of work, similar to Bitcoin, but in this case, going over to a method of proof of stake. Things like we've seen, for example, for some of the early day projects like Purecoin, but also some very large projects like Cosmos, etc. Right? There's a lot of other proof of stake projects out there. So what's so big about this, right? Going from a proof of work to proof of stake model. It's a very good question. More than anything, this is not only going to provide some sense of scalability for Ethereum, but many people believe that this is going to serve as a very bullish catalyst for Ethereum, as it requires staking large amounts of Ethereum. And there's a few kind of, like, not so much caveats, but important things to notice when understanding ETH's supposed kind of monetary policy or approach to proof of stake. So we'll go ahead and dive through the article here to talk about a few of these. I really think this is pretty sure, I hope I'm pronouncing his name right. I think he did a really great job writing this article at Crypto Slate. And he basically summarized a lot of key points that came from an individual named Adam Cochran over on Twitter. But anyways, we'll go ahead and talk about this. So basically discusses about staking, bringing a lot of FOMO, a lot of basically buying power to the Ethereum network in this case. And the reason that is because obviously people need to stake it if they want to have a consensus node on the network. But it's not just to have a node on the network and have some say in Ethereum. It's because you want to get the staking rewards. So this is something that Ethereum has not provided previously. The inflation has been going to miners who buy computer hardware, predominantly, standard NVIDIA graphics cards, and are running ETH hash in the background in order to hopefully get the next block and get a reward. Well, that's going to go away in this update. All the GPU power, or the hashing power that's coming from all these GPUs, is not going to be used for ETH anymore. We're going to start to see a transition here into proof of stake. This is where really the predominant amount of inflation is going to come in. So in this case, they're looking at around 3 to 5% yearly returns on staking, which will make Ethereum attractive to larger investors. So if you're running an ETH node in this case, which is going to require you to hold up to 32 ETH, then in this case, you can earn up to about 3 or 5% in the form of ETH by the end of the year. And this is going to bring in, as we already have right now, millions of Ethereum every year in this case, and the inflation. Now, it's basically just starting to transition that inflation from miners receiving the reward over towards stakers, and stakers taking on the validation job comparative to miners. You can see here as well, there's a few other things here in regards to some of the benefits that he mentions in the tweets, but I think for simplicity's sake, I'll go ahead and jump over to Adam's tweet storm here. So he talks about really 7 reasons. Most of them really have to do with the simple benefit that this is going to bring for price. He mentions rent seekers, people who are looking for a fixed 3 to 5% return without having to do anything. Secondary rounds as well. Talking about the supply shock in this case that's going to come in regards to Ethereum. So the ROI in this case is probably going to be appearing as higher because you have in this case not only the 3 to 5%, which is great, but you also have the increase in price due to people buying ETH to stake it. So it does cause these kind of cyclical processes. Retail FOMO is one thing he brings up. Outside of that, really what interests me is actual demand. So you really have a mix of a really perfect storm here for Ether. And I'll be honest, yes, it does have to do a bit with speculation, but it has to do also with the core demand that Ethereum is going to have, as we have a lot of different decentralized finance applications growing on the Ethereum ecosystem. So you have a perfect combination here. You have people actually utilizing Ethereum applications, and along with that as well, you've got people as well who need to stake Ethereum. So one thing that I think is very important to talk about is now that we're going to have more scalability on Ethereum, this is going to provide more room for more applications to operate on Ethereum. I can tell you guys firsthand, I'm building a startup on the Ethereum network right now, and one of the big kind of things I've been curious about is when ETH 2.0 is going to be coming up, because we do care about scalability. Scalability is what's going to make what we've built viable on the Ethereum blockchain, because all applications need to be able to process transactions at a relatively reasonable cost. No matter if, for example, the end user is paying the gas cost, in this case paying Ethereum, that's the terminology used for when you're paying Ethereum, similar to how you pay Bitcoin for a transaction fee. In ETH, it's called gas in order to, basically provide certain functions on the Ethereum chain and to get your transaction, whatever it may be, fit into the next block. That's one thing that we have to be curious about for our users, or in the case of our startup where we actually pay the gas fee. So there's a lot of interesting things that have to be considered here in regards to scalability. And if we have that scalability, that means we're going to be able to run more applications and more transactions in the Ethereum blockchain, further setting demand for ETH as a currency. So alongside that, plus what you have in regards to the staking rewards for those who want to buy it up and stake it, you've got a lot of buy-side pressure for Ethereum, which I think is really cool. I think it's not only going to serve as a broader catalyst for the cryptocurrency space to turn more bullish, but it's definitely a standout reason why Ethereum is probably going to maintain its second lead position in the cryptocurrency market, no matter how volatile or interesting other projects get. I think Ethereum has positioned itself so well, not only in the sense of its network upgrades, but along with that with its developer community, with the projects that have been coming out of the DeFi or decentralized finance ecosystem. It's really, really interesting to see Ethereum finally kind of realizing its potential. And these have been talked about for a very long period of time. As we talked about, Kyber Network and a lot of these projects have been around before DeFi was a thing. I was a big proponent of financial applications, not a lot of the speculative kind of use cases of blockchain that all inevitably ended up failing in the long term. Finance is the killer application, at least from my perspective. You guys might have a different viewpoint, and I'd love to hear from you all in the description. Excuse me, in the comments. You guys sadly can't put something in the description, but you can put things in the comments. All right. So we talked about that, right? ETH 2.0, really exciting. We'll continue to talk a little bit more about this because there is a few other things outside of staking that are going to start to come into play for Ethereum. Maybe not if in ETH 2.0, but in a later update, such as implementations of ZK snarks, things that are going to integrate privacy, further scalability. We also have other things that are going to be working as layer 2 solutions, like optimistic rollups, that can provide even further scalability for Ethereum. So lots of exciting things, but not enough time in today's world to be able to talk about all that just yet. We'll take it one step at a time, but I recommend you guys read into ETH 2.0, see if it might be for you in this case. Maybe you might want to run a node. It's up to 32 ETH you need to stake, but what's nice is that's open to a pretty decent amount of people, but not everyone in this case. It's definitely, in this case, at least at the current prices, a few $1,000s. All right. And also, I think as well, there's going to be some services to stake alongside other people. So if you only had like 3 ETH, you could, much like a mining pool, you could put people's money together and stuff, and you could receive a portion of the staking reward. I digress, though. Let's go ahead and talk a little bit about market price action. So Bitcoin right now is actually holding up quite nicely. We just ticked up above $9,000 here a couple of minutes ago before I started the video. We can see here, if we take a look at the hourly, we've been doing quite nice. We're getting back up to where we were back here on the highs of the 11th. Now, if you take a look at the wicks here, maybe we've got a little bit of a ways to go. But I think in this case, it looks like we're starting to obviously signal support, signal higher lows and higher highs, and showcase that we want higher levels here on price here for the next coming days. And we did this through the showcase of support at the same price level that we held back here before the major sell-off. This is a very significant level here. Continue to watch 8,500. I'm not going to doubt that we might set a lower high here around maybe 9,500, and we might turn back over. Who knows, right? But right now, I want to see the support at 8,500 hold. If we continue to hold this here, I have no doubt that we're likely going to see a further breakout above resistance, as we have drawn here on our chart here for Bitstamp. We can see here as well the price might come back up, meet to our potential bullish theory, where we can see price break above the yellow line, which we haven't broken above ever in history, ever since back here in 2017, and we could come up here and rest on the support on this line of resistance. We can make it new support. Right? So apologies if I'm making that sound confusing. Basically, we would expect price to come through the yellow line and come up here and make a new support before kicking off the next rally here going into late 2020, 2021, into 2022. All right. So that's in regards to technical analysis. Nothing too crazy. The other thing I wanted to mention real quick is that the fear and greed index is favoring bulls in this case. We're still generally considered sold, oversold here in this case, or more towards the fear side. But again, we just barely got above here to the positive side the other day. I think that we've got a ways to go. As we saw back here in June, we have yet to really get towards any kind of parabolic price action or kind of parabolic overvaluation in regards to Bitcoin. Last thing I wanted to talk about here in regards to kind of big developments in the crypto space, Telegram, as many of you might know, I use the Telegram app myself, has given up on its cryptocurrency operations after a major court fight. This has probably been one of the biggest legal fights for the cryptocurrency space with the SEC. So basically, to put it simple, Telegram had raised billions of dollars in this case in order to fund the development of a blockchain network they called TON, or that was the token that they were raising for. Basically, Telegram had aimed to build some major network with like messaging, decentralized messaging, file sharing, all kinds of applications that they wanted to do in a distributed or decentralized way. And from my knowledge in this case and the statements that came out from Telegram, they released a public blog post that they basically decided to disband the project. And this had to do, again, with the constant struggle of fighting with the SEC. Now, I take a very neutral approach to all of this. I personally don't know why Telegram needed to raise as much as they did. Again, maybe I don't know the full story. I haven't done a massive amount of due diligence, to be completely fair with you all, in regards to Telegram's project. Because for me, it was at the time where I just got kind of tired of all the excessive raises and ICOs, and I wanted to see real development. But supposedly, according to the Telegram team, they had a lot of stuff built. They had a lot of things invested into building this project. And it is really sad to see that the SEC and Telegram couldn't find some kind of middle ground here. I've been really impressed by how the SEC has been dealing the whole ICO wave. They really have been tackling, more than anything, projects that raised an excessive amount of money or weren't building anything at all. So, I want to play devil's advocate here and really take a middle down approach and wish that in some way Telegram and the SEC could have worked together. But something, feels a little bit off by this, because it either means that the SEC, for example, is really trying to censor innovation, or it means in this case that Telegram really didn't have much built. And they did raise an excessive amount of money, more than some startups are worth in this case, just to really put it in context. So again, I think more than anything, it was just kind of an ugly mess that ended up not working. And I would love to see in future cases like this that we see if whether or not the SEC, as well as Telegram, companies like Telegram, can come together and really try to meet some middle ground. But I think it showcases a disparity in opinions here and a new kind of gray area that we really haven't seen be challenged up until this point. So I'd love to hear what you all think about it. Again, do you think that there's some kind of middle ground here on issues like this that we can see end up being resolved? I'd like to hear from you guys down below in the comments, as well as what your thoughts are in regards to crypto markets abroad. But that all being realized, that's going to be it for today's video. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are. If you like the video, drop a like. It's always appreciated. It always helps out the channel, as well as subscribing if you're new. We always love having new people join the Data Dash family. But that being said, hope you all are having a great day wherever you are, and I'll see you all in the next one. Stay tuned.